Hey guys, since the federal government has announced that they are going to be increasing interest rates to slow down the economy, we have seen the value of cryptocurrencies drop. The question becomes, how is this going to affect your taxes, and how can you use this to put you in a better tax position? Well, in this video, I'm going to explain to you what you can be doing right now to tee yourself up for a wonderful tax strategy moving forward. As you guys can imagine, our economy has been up, down, down a little bit, up, but anticipation of the federal government increasing interest rates to slow down inflation, that news makes the stock market, currency markets actually react significantly whenever our government makes an announcement like that. As of late, you have seen dips in the stock market, you have seen dips in the cryptocurrency market. Let's talk about the stock market for a second. We know the stock market has been a bullish market over the last 10 years. It's been really an incredible run. But all good things eventually are going to slow down and come to an end, and they're going to course correct and they're going to rebound. What does that mean for us and our income taxes? Well, from a stock market perspective, unless you sell off your stock, unless you sell your positions, unless you actually do something, it's not going to affect you from a tax perspective. You would need to actually sell the stock, and then come tax time, you would need to report the sale at the sales price, and you would need to report the cost basis at the price in which you bought the stock for. So unless you do something, there is not going to be an impact for you. Some of you may be thinking, you know what, I want out of the stock market, it's making me nervous. And some of you may be thinking, I might want to take advantage of the losses if I were to potentially sell my stock, or I might want to protect myself, sell my stock off, and then perhaps buy it back. Well, be careful, because in dealing with stock, we have what we call wash sale rules, which means that if you are going to sell stock, you cannot then turn around and rebuy it and actually benefit from a potential loss. So you got to be very careful when you're dealing with the sale of stock and trying to make sure that you don't lose as much money in the stock market. If you're selling because you want to grab your gains and you don't want the market to go so down that the value of your account drops significantly and it may take years to rebound, then perhaps you would want to sell off your stock. And you could potentially be selling off your stock for a gain. But if you're selling off your stock because you're in a loss position, it might not be as valuable as a sale for tax purposes. Now stick with me on this concept as I move over and talk to you about the sale of your cryptocurrency when the market is taking a dip. Cryptocurrency, as we know, is a riskier type of investment. It goes up and down every single day. A lot of people have made a significant amount of money off of owning cryptocurrency. And here's the advice that I am going to give why the cryptocurrency market is dipping, and it's expected that there is going to be a run on crypto. This is what you want to consider. Because the cryptocurrency market is not subject to the wash sale rules, what that means for you is you can sell your cryptocurrency while it is down right now today. Sell your position and you can turn right back around and buy. Why would you want to do that? Because if you sell now and your cryptocurrency is really down and you're going to sell at a loss, remember, I said selling at a loss means whatever you're selling at, you purchased it for higher, right? So if you're going to be able to sell at a loss why the market is going down right now, I am going to advise, and I caveat that with make sure you review with your tax person, but I would advise as a strategy that you sell now. Why? Because you want to harvest those losses. Get some losses on record. We're in early 2022, and this works anytime that you see your cryptocurrency go down. Get some losses on record. Why? Let's say that we move throughout the year and cryptocurrency makes that run. Cryptocurrency has been predicted to go up as high as $100,000 per coin. That has been in the news as well. I know it saw a peak, I believe around 65,000, 66,000 per coin, but it's being predicted that it will go up to about $100,000 per coin. I don't know. I'm not a predictor. I just read what you read in the news as well. However, let's say that we head toward the end of the year, the mid part of the year, and we get your crypto values up. And let's say the values go up. And let's say right now it's down to $41,000 per coin. And let's say it goes up to $75,000 a coin, $65,000 a coin. And you say to yourself, you know what? I'm going to sell my crypto. I am going to take my gains and walk away right now. Or maybe I want to sell my crypto and go invest in a piece of property. Or maybe I want to sell my crypto, take my gains and go invest in my business. Now you have a gain on sale, right? Because if the crypto's gone up to 65,000, 75,000, and you bought it at 41,000, that difference between that 41 and that 75, we're talking a pretty significant gain. And we know that any gain on sale from cryptocurrency, if it's a short-term gain, it's going to be taxed at short-term capital gains rates, which are ordinary income tax rates, which are pretty high rates depending on the tax bracket that you're in. However, let's go back to my initial strategy where I said to you, if you see your cryptocurrency going down, sell it if you could sell it at a loss. Get some losses on record. Sell, turn around and buy. You want to stay in the market if you're looking for that run to increase, right? If you're looking for that crypto to go up, you don't want to move out of the market. You could turn right back around and buy on the exact same day. Why? Because the tax code says that cryptocurrency, as of today's date, is not subject to the wash sale rules. That means that you could sell your currency, take that loss, if you have a loss, and turn right back around and buy. There's no waiting period for you to buy back. You don't have to wait that 30-day period for you to be able to buy your cryptocurrency back. This is an excellent strategy for you to be able to reduce your tax bill. But you got to start thinking about your taxes all year. Many times you're not thinking about your taxes until you get down to the end of the year. But when you're dealing with your cryptocurrency that is going up and down and it's in a volatile market, you got to really be thinking strategically all the time about your tax position. And right now, with the feds making that noise about increasing interest rates, and the markets are reacting to that, stock market is dipping, crypto market is dipping, I want you to think, how can I benefit from a tax perspective? There's always two sides to an equation. If there is something going on in our economy, what is the flip side of that coin? Interest rates are potentially going up. Crypto market is dropping. Stock market is dropping. How can I leverage that from a tax perspective? So I want you to start being tax smart. I want you to start thinking about what I need to be doing. And because of where we are right now, we're in the beginning of the year. You know what happens oftentimes in the beginning of the year is that we're concerned about our prior year taxes. We're in the beginning of the year. So our mind is not on our current year taxes. For most of us, our tax year runs from January 1st through December 31st, right? And for the majority of us, we're filing our personal income tax return is due April 15th. But from that time, from January through April 15th of the current year, you need to be planning about the current year's taxes just as much as you're thinking about filing your prior year tax return that is due on April 15th. This is where I see a lot of taxpayers getting themselves in a slinky for their current tax year from January through April because they're not paying attention during that first quarter because they are concerned about filing their taxes for the prior year in that first quarter. So your very important takeaways are, number one, look at how your cryptocurrency holdings are reacting to the news about the Fed's increasing interest rates. Look at your stock holdings and see how they're reacting to the news that the Feds are increasing interest rates. With your crypto, you have that opportunity to sell and buy right back. So you're not going to lose your position, right, at where your crypto was in terms of value. Harvest those losses right now. So when we get on that bull run later on and you have those gains, you can sell and be able to offset those gains with losses that you generated for yourself. The Fed is also talking about they're going to increase interest rates 4 times this year. Not sure if they will or not, but that's the talk. So be mindful, pay attention, keep your eyes and ears aware of what's going on. Because if you can see when that conversation is had, you see how the markets are reacting, you see how your investments are reacting. I want you to be tax smart, and I want you to think of what you need to be doing from a tax perspective. If you enjoyed this video, I want you to like, comment, and subscribe, and I can't wait to see you on my next video.